Today's video is brought to you by SD Bullion. Buy your gold and silver from SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Now let's get right into today's lead story here, folks. The U.S. launches Red Sea force as ships reroute to avoid attacks. This one from Reuters, and it's appearing as if a new front has been opened in this Middle East conflict. Now, some people may take issue with that statement. They think that is a hyperbole and exaggeration, that a new front has not been opened. But I really don't know what else to call it, because the target of this force is not Hamas, but rather the Houthi militants, militants as they are described, rebels in Yemen. I don't know how accurate a name that really is for the Houthis. From my understanding, they are in control of the Yemen capital, have been for some time. They control the majority of the military forces in Yemen. So, one man's militant is another man's freedom fighter, I guess, as you might say. But the important thing here is that the mainstream media and the folks who are in charge, the folks pulling the strings here, seem to want to be blaming Iran for these attacks being launched by the Houthis. Now, to what extent Iran plays a role in this, I think officially they have said that they're not orchestrating these, but that they do support the Houthis. So, we have to interpret that as best we can. But there are some very important aspects of this escalation for the global economy. Right now, seeing the price of commodities on the rise, I think this is just the beginning. But let's take a look at what the U.S. is doing here and what this may mean for global markets. So, the United States on Tuesday launched a multinational operation to safeguard commerce in the Red Sea as attacks by Iran-backed Yemeni militants forced major shipping companies to reroute, fueling concern over sustained disruptions to global trade. And this is going to cause the price of just about everything to move higher, regardless of whether or not ships move through the Red Sea or not. And I'll tell you why in just a moment. First, let's take a look at this. Oil major BP paused all Red Sea transits, and a slew of top shipping firms, including Maersk, that's the world's largest shipping firm, started diverting shipments normally made through Suez around the Cape of Good Hope on Africa's southern tip. The new route all the way around Africa adds days to journey times and incurs higher costs. So that means everything on those ships is going to become much more expensive. The list of companies avoiding the Red Sea is continuing to grow, and you can expect this to continue as long as this conflict remains in effect. And I don't see any signs that this will be stopping anytime soon. Now, do me a favor, if you're in the live stream, smash that like button, share the video, hit subscribe. It's a very helpful thing for the algorithm in spreading this information and getting a take on it that you might not hear elsewhere. So this goes on here. This is an international challenge that demands collective action. This is Defense Secretary Lloyd Austin, as he announces what is being referred to as Operation Prosperity Guardian. And, this is very important for the U.S. at this moment as we head into the 2024 election year. The Fed already, they're talking about cutting rates, although we are seeing some damage control. We had Fed Williams, kind of walking back the talking points that Powell had regarding the dot plot at the last FOMC conference. But very important that they try to keep a lid on inflation, and this development is not going to help that at all. Of course, we have a data-dependent Fed. Any significant upticks in inflation may very well affect the course of Federal Reserve rate cuts, although we already have a largely insolvent banking system, a massive liquidity crisis brewing here in the U.S. So it's no wonder that they want to safeguard prosperity here and try to maintain global shipping. BP's decision to temporarily pause all transit through the Red Sea and oil tanker group Frontline also said its vessels would avoid passage through the waterway, and it shows that the crisis is broadening to include energy shipments. Crude oil rising. Let's take a look at the chart of crude oil. You can see up 1.56% today, up over $73, pretty well off of the lows that we saw under $60 just a few days ago. And, one interesting thing about the price of oil, I think, is that despite the fact that we saw oil touch under $70, we're not really hearing anything about filling the strategic petroleum reserve back up. And again, this indicates to us how important it is for the powers that be to keep a lid on inflation. There's, a reason that they're not coming out and trying to refill the strategic petroleum reserve, which is at multi-decades low, despite the fact that U.S. oil production has hit a record high. No, instead we are exporting that oil around the world. It's part of an attempt of this administration to keep inflation under check. Of course, the current commander-in-chief had a record low approval rating, a very bad approval rating to be heading into an election year with. So you can expect them to pull out all the stops to try to stop prices from rising. Of course, with the exception of, not ending their deficit spending and money printing. That's not going to happen. But as the economy begins to fall apart here, I think we're going to see them pull out more and more stops. And ultimately, I think they're aware that they're going to have to print sooner or later. And so they need to get inflation under control before that happens. So again, shipping giant Maersk is rerouting ships due to Red Sea turmoil, the biggest shipping company in the world. Around 30% of global container trade passes through the Suez Canal. This from CNBC. And Maersk issued a statement. The attacks we have seen on commercial vessels in the area are alarming and pose a significant threat to the safety and security of seafarers. The Cape of Good Hope route, the alternative route that they're having to use, it reduces an Asia-Europe trip's effective capacity by 25%, according to UBS. Market watchers say the situation is likely to put pressure on global supply chains and drive up freight rates as additional time for ships to reach their destination takes capacity out of the market. And then also we've got Lloyd Austin, once again, declaring this international task force to combat additional attacks. Let's take a look at the price of silver. We've got silver up by about 1% today. Again, I would expect this to persist as this conflict continues to escalate. Gold, same story. This is the daily chart for gold, and you can see it too is rising. And all it's going to take, I believe, for gold to surpass this $2,100 level to take out the previous all-time highs is one significant escalation in the Middle East, which appears to be, potentially right around the corner. This also shows you that even if ships do continue to transit the Red Sea, we're going to see higher prices for everything regardless. London marine insurers widen high-risk zone in Red Sea as attacks surge. So insurers are now demanding a higher premium for ships traveling through the Suez Canal and the Red Sea. London's marine insurance market has widened the area in the Red Sea it deems as high risk after a surge in attacks on commercial ships, according to a statement issued on Monday. And as far as I know, the latest number is that 36 attack drones have been shot down by the U.S. Navy, that number rising by the day. This is important. Look at this. War risk premiums have risen to around 0.5% to 0.7% of the value of a ship. That's up from 0.07% in early December, so just weeks ago. That is big news. That is a tenfold increase in the cost to insure shipping through this area. So even if ships are able to take advantage of the shorter route, if they do incur that risk, they're still going to be paying a lot more for insurance, as we've seen, a tenfold increase and likely to continue moving higher. So, really the bottom line here is I think that we are going to see higher prices for crude oil. It looks like markets are finally beginning to pay attention to this escalation in the Middle East. It also sounds like Iran is increasingly likely to be drawn into this conflict. If you listen to what Austin and the other folks have been saying, there's a lot of finger pointing at Iran here, and I think we're being set up for a broader regional conflict that will involve them. If Iran gets drawn in here, not only is the Red Sea going to become a problem, you're also going to see the Strait of Hormuz get shut down. Iran exports more than 2 million barrels of crude oil per day, a lot of that going to China, but remember, crude oil is a global market, and so we're going to see much higher prices for energy. I do think 2024, we're going to see triple-digit oil and beyond. That will coincide with a rise in all commodities and just about everything. If you take into effect that the next year is an election year as well. The Fed, they tell us they're not political, but I think we all know the reality here. They're going to be printing, they're going to be cutting to get us out of this liquidity crisis that we're in the midst of. It's a perfect storm for much, much higher inflation, and that is partially why I am stacking gold and silver. I am also continuing to add to positions in the energy market. I think it's just kind of insurance against an escalation here, and hopefully that doesn't play out, but it's looking more and more likely, as we've been forecasting here on this channel for several weeks now. We are going to see a expanding conflict in the Middle East and much higher commodity prices. Shifting gears here a little bit, let's take a look at this. This is interesting. We're talking about gold. Well, look at Kitco's website. This has been down for a couple days now. Tell us here on this landing page that our website is currently experiencing a disruption due to a cybersecurity incident. Our team is actively working to resolve the issue as quickly as possible. Well, this has been more than a day now that Kitco has been down. So, in and of itself, it's just notable that cyber incidents seem to be on the rise. I think anybody who's paying attention is aware of that. And that, too, is a trend that I believe we can expect to increase. Very notable here that this is a gold and silver-based service, though, that is under attack. Now, that's not particularly eyebrow-raising at the moment, but if we continue to see attacks of this nature, if more and more precious metals-related services are under attack, that would give pause, give reason to consider this perhaps a little more deeply. Of course, cyber attacks, the rising frequency of cyber attacks, the almost guaranteed increase in cyber attacks as these global conflicts continue to play out. Just one more reason to have some physical, hard, tangible assets outside of the digital financial system in your position. Let's take a look at this story too from the U.S. Sun. Now, to be fair, this is a bit of a tabloid in my opinion, but their headline here, Defiant Zelensky says Ukraine plans to conscript more than 500,000 soldiers after what he calls a difficult year. So a few things you can take away from this. The conflict in Ukraine, despite what you may be hearing, is not winding to a close. They are going to run out of people in Ukraine to throw into the meat grinder here eventually, though. And that means, unless this conflict comes to a negotiated peace, we are likely to see the day when NATO soldiers are fighting Russian soldiers, and that too will be very disruptive to the global economy. Should that occur, I would expect that we will see safe haven plays like gold moving much higher. Hopefully, again, conflicts are wound down in a peaceful manner, but I wouldn't cross my fingers. Also, Zelensky says that it's been a difficult year. That gives you an idea of how much the state really cares about you. The majority of Ukraine's youth has now been eliminated by this conflict, and he calls it a difficult year. So just keep that in mind when you're analyzing any of these things, that the state, in Ukraine and elsewhere as well, they don't really put a lot of value on their citizens' lives. Perhaps it varies a bit from state to state, but just keep that in mind. Now, with all of this conflict unfolding around the world, you've got Ukraine, you've got the Middle East expanding, you've got Iran likely to be drawn into this. There's a huge amount of uncertainty. One thing that is not uncertain is that this number, the U.S. national debt, now sitting just shy of $34 trillion, is going to continue to expand. It's no surprise that as our debt-addicted economy is entering into a liquidity crisis, as the Fed has kept rates at, quote-unquote high levels, our economy can barely sustain a federal funds rate over 5%, that we're being drawn into these global conflicts. War is an excellent mechanism for creating massive amounts of debt, the number one product of these central banks, and a product that has to continually be expanded in an exponential manner in a debt-based economy like ours. What better excuse to continue doing that and to cut rates and to monetize vast sums of debt? Well, a war is always a crisis that the powers that be will take advantage of to do just that. So expect more conflict as we move forward. Expect more money printing. Expect more expansion of the debt. And do what you can to get prepared, because this is not over by a long shot. 2024 is an election year. It's going to be a very interesting one. And just stay safe, everybody. Happy stacking, and I will catch you next time. Smart Silver Stacker, out.